This is the hottest topic on the lips of many investors and buyers agents in this day and age. Guys, I'm talking about Launceston in regional Tasmania, an area that has been absolutely propped up by buyers agents and investors alike. And today we're going to look through the data and decipher whether we ought to look at considering this area to invest in. I want to do something a little bit different today. I'm going to reverse the order. So we're going to look at the economy of Launceston today. We're going to look at a couple of ABS metrics, and then we're going to have a little bit of a play on HtAG and see what suburbs meet our brief, if any. So Launceston economy is quite strong. It's home to about 71,000 people, supports close to 43,000 jobs, and has an annual economic output of just shy of $13 billion annually, which is massive. And the industry divide in Launceston is quite healthy. We can come down here and look at the jobs. We see that healthcare and social assistance makes up 22% of the industry in Launceston, followed by retail trade at 11%. So obviously healthcare and social assistance definitely dominate the Launceston market. You've got education and training just shy of circa 10%, construction at 8%, accommodation, food and services at 8%. So it's actually a rather diverse economy for a regional town. So far we've had two ticks, right? The population is at about 71,000 people, so it's definitely not a small city, and the employment diversity across Launceston is rather healthy as well, with 22% being the industry dominant healthcare and social assistance. Now, I just wanted to pull this government website up that talks about the overlays, flood overlays of Tasmania, and particularly focusing on Launceston. Now, to be honest, it's not a very user-friendly website or tool. It's definitely no VIC plan, that's for sure. It's not as clear-cut, not as easy to navigate, and not as easy to read. But we can see here that there are a few potential flood zones, a few potential rivers that run through certain areas of Launceston. Definitely one up here near Georgetown that may have some impact to certain suburbs or certain areas within some of these suburbs, and definitely further due diligence is required when you are looking to purchase an investment property in the area of Launceston. Now, some of the very important population metrics and demographics to explore as well before we get into HtAG. I just thought I'd put this up, just the overall population of Australia as it stands according to the ABS. We're just shy of circa 28 million people, which is quite phenomenal. And you can see here these stats: one birth every 1 minute and 49 seconds, one death every 3 minutes, one person arriving to live in Australia every 51 seconds, one Australian resident leaving to leave overseas every 1 minute and 47 seconds. So, look, population growth is important for any country, for any economy. I don't want to make this video political and talk about the recent immigration numbers, but we'll just leave it at that in terms of this tab here. Population in Australia is a healthy 28 million. Now, we'll go over to the next tab again on the ABS website, and we can see a couple of different breakups of different population metrics. So we see here the natural increase by state and territory annual, right? So this is to June 2025 is the latest data, and we're going to focus on Tasmania. So we can see in Tasmania up till 6 months ago, there was 5,562 births, 5,212 deaths, and a natural increase of 350 people in Tasmania, right? If we look at the net overseas migration by state and territory, again we're focusing here on Tasmania, we can see the overseas arrivals was 5,315, the overseas departures was 2,593, giving us a net surplus of 2,722 people in Tasmania. Nothing too exciting, nothing to really write home about when you compare it to New South Wales, Victoria, Queensland and WA. If we look at the net interstate migration by state and territory, so people moving around within Australia, we can see Tasmania actually had a net interstate migration of negative 1,877 people, meaning that more people left Tasmania for interstate destinations than what they arrived from other states within Australia. Now, that's something important to remember when we look at the plausibility of investing in Tasmania, and something that you have to factor in. Now, if we look at this is an interesting graph, right? And I debated myself whether I show it in table format, but I think that's a bit too complicated to understand. So graph format is probably better to look at. Now, something interesting that caught my eye, guys, is this. Now, we look at the So down here we've got Hobart for both male and female in the light blue and the yellow, and then we've got the rest of Tasmania in the dark blue and the red. And it's actually very interesting to note that in the younger age group demographics, right, we see that more people go to Hobart than they do the rest of Tasmania, so, you know, including regionals. Now, we can see that that sort of shifts when you get to that 45 to 49. It starts to even out here on the male side and on the female side. And we can see once you get into your 50s that more people actually go to regional, the rest of Tasmania, in both male and female, than the younger demographic. So that's a very interesting statistic. And if we dig a little deeper, we can actually understand that one way to look at it is this: the younger age demographics leave Tasmania for the mainland of Australia, right? But the older or the middle age demographic of that mid 40s and upwards are actually going to the rest of Tasmania, both male and female, including Launceston. They're more established, they're in their peak earning years, and they're more than likely looking to buy a principal place of residence to reside in, whereas the younger demographic are coming to the mainland and looking for more opportunity in terms of employment and lifestyle. So something to really factor in as an investor when you're looking at areas to invest in is the demographic that is making up the suburb or the area where you're looking to invest. And we can see here the regional part of Greater Hobart, rest of Tasmania, increased by about 950 people to July 2025. Again, not a massive increase, but something to bear in mind as well. And that definitely plays into the point we're saying here again, that that middle age demographic, the 45 to 49 and upwards, are definitely moving out of the capital city of Hobart and into the rest of Tasmania and regional Tasmania, including Launceston. Now, for everyone's favourite part, I've brought up the LGA of Launceston on HtAG, right? And it compromises of about 23 suburbs here that we can see. Now, I haven't applied any filters yet or any metrics. I've debated whether I include houses and units on this. If I include units, it actually gives us about 36 suburbs down here. But for the sake of this video, I'll just leave it at houses for now, and we can have a look and see what we're coming up against and what we're playing with. Now, there's no particular order really. So let's have a look at the metrics and see what we come up with. So let's look at probably the most competitive price point in Australia right now is about that $600,000 to $700,000 mark. So let's look at suburbs in Launceston that have a typical price of less than 600,000, right? And let's see what that spits out for us and what that eliminates. So we can already see we've gone down from 20 odd suburbs down to 8 suburbs. So Mayfield coming in at the cheapest at 407,000 and South Launceston at 582,000, right? So we've already eliminated a lot of suburbs just by using this metric. Now we can increase our net slightly and put it at 650,000 and see what that comes up with. That's brought us back up to 11 entries. I'll just expand this to 20 just so we can see all 11 entries, and we can see we've got areas like Newnham included in our Prospect, included in Punchbowl, included in Mowbray. They're areas that we know from our research and our talking to agents that are quite competitive at this point in time. Now, again, if we use the confidence metric and we put that as not low, we only want to target suburbs that have medium to high confidence, meaning a decent amount of transactions, and that filters us down to 9 suburbs in Launceston at this stage. Now, yield is going to be very important, right? And we're going to have to be very flexible with our yield. Otherwise, we're going to eliminate most suburbs, if not all. Now, I just want to remind everyone and caveat everyone that Launceston especially has been pumping for the last 6 months. It initially started off as a bit of a contrarian play. Everyone was focused on regional Victoria, your Bendigos, your Geelongs, your Ballarats, your Latrobes, and Tasmania wasn't getting much airtime. All of a sudden, Tasmania appeared to be relatively affordable to the rest of the country because of its 3 to 4 year hiatus where it hasn't done much. So let's have a look at the yield. But as prices have appreciated rapidly in the last 6 to 8 months, propped up by buyers, agents and investors, we know that the yield has compressed. So if we put the yield at greater than 4.5%, we're going to see that there's only one suburb left. Now, we can't be rigid in our approach. We need to make sure that we cast a wider net and then narrow down and do our due diligence. Now, if we put a yield of greater than 4%, it's left us 5 suburbs. Right, and we can see that here in the yield column. Excuse me, I went a bit too far. So we can see that here in our yield column, right, the more expensive price points at the bottom, Newnham gives us the lowest yield, 4.14, and obviously the cheapest in terms of typical price is Mayfield, and gives us a 5.04% yield. Now remember guys, we do not look at a metric in isolation. That is not the way we like to invest. You have to take a holistic approach and not just look at one data point and make a $500,000 or a $600,000 decision. That's very unwise to do as an investor. Now, if we look at the renter owner occupier, let's put that less than 40, like we always do. Again, that only leaves us Newnham left to explore. So let's put that at 45 for now, and let's see what that comes up with. So even if I want to be generous and put it as 50, that's well above my risk tolerance. So, investing in suburbs that have a renter owner occupier of 50. But let's do that for the sake of this video and have a look. Again, let's put the stock on market less than 1. Let's see what that comes up with. It hasn't changed because all areas are going to be pretty tight. Inventory, let's put that at less than 2 and see what that comes up with. Again, that hasn't changed. If we change that to 1.5, no, it still hasn't changed. Okay, good. So now the inventory and the stock on market is very, very low, meaning all of these 3 suburbs are going to be very tight in terms of supply, which is good for price appreciation. Now, if we put the building ratio to less than 2, that hasn't changed, and the vacancy rate, I don't anticipate that to change because Hobart actually has the tightest vacancy rate in the country. All right, we're left with 3 suburbs in after doing this quick brief. Let's look at Newnham, because I know for a fact that that has been a very, very hot suburb, and a suburb that's been widely touted by buyers agents and the like. So let's have a quick deep dive of Newnham in Launceston and see what the data tells us. So typical buy price of about 620,000. Again, look at that yield, guys. That is compressed 9.2% for an average yield of 4.1%. Now, again, if you're looking regionally, we want to get closer to that 5% yield, guys. You don't want to be stuck with a 4 or a low 4% yield. It could really hamper your property portfolio growth, but again, that's to your own due diligence and risk tolerance. So Newnham, I hope I'm saying that correctly for any Tasmanian locals watching this, but we've got a population of circa 7,000 people. We look at the typical price for the last 20 years, and again, it's a nice steady, it's actually rather flat in that 2010 period, and it would have been like if you'd bought in the early 2010s, you would have actually lost a lot of opportunity cost because you would have done nothing. You would have actually regressed slightly in that period, but then it really shot up, as did most of Tasmania, around that 2016, 2017 mark. It started its run. We did very well over COVID. We see that flat plateau there from about 2021 for a few years, and then all of a sudden 2024 it's just shot up again. So if you've bought in that 2024 mark in this area, congratulations, you've done very well. We can see that in the last few years it has really taken off and will continue to do so. Rents haven't moved too much in the last few years, which is something to keep an eye on and bear in mind as an investor. And the fundamentals, OSAT score of 1, rented owner occupier 36%, within our threshold and our risk tolerance here with what we like to do. And look at that, guys. Look at the supply and demand metrics of this area, and this just correlates with what I was saying before, with our knowledge and our research on the ground. Stock on market extremely tight, inventory less than a month of supply, very low incoming building approvals, and days on market 32 days on market. And I would beg to say that that's even quicker. A lot of properties are going off market at this stage, with some big buyers agents very active in this area, and vacancy rate extremely tight at less than 1%. So we can see that this area, as is a lot of Launceston, is really a hot market, is really taking off. And we can see here that the 3 bedrooms are in the most demand type of dwelling, and the affordability not ideal, creeping up above that 40 years to own, sitting about a 41.5 years to own for the local demographic. So guys, final verdict on Launceston and Newnham. I picked this suburb purposely because it has had a lot of airplay, but final verdict for both Launceston is you have to be careful where you invest, guys. It has been an area that has been propped up, hasn't quite made the media yet, with regional Victoria, Western Australia, Brisbane still taking the limelight from suburbs at this point in time in terms of macro and micro environments where to invest. But Launceston has quietly been growing in the background, and I'm not going to say the boat's been missed, but I'm going to say be very careful, guys. Don't follow the herd. Where you choose to put your capital could really hamper your growth. Just remember, when you buy an asset, a property, You're not buying it for the sake of that property solely. You're buying it with the next move in mind, like a chess piece, like a chess game. What is this property? How is it going to allow me to continue to scale and continue to grow? So would I invest here? Potentially I would, but I would have to do my due diligence. I'd have to make sure the price makes sense, the yield makes sense. I wouldn't buy because of the popularity. I'd want to buy with the intention in mind in being able to refinance equity within 6 to 12 months and then go again. So guys, I hope you found this video helpful. I hope this has brought some attention to what's happening in Launceston and the broader Tasmania at this point in time. Please reach out in the comments, guys, if you've had any experience trying to buy in this area, and help out the rest of the community. Till the next video, guys, take care.